It is Friday, November 17th, 2017. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And, I've been all over Twitter and all over Facebook and just all over today while I've been doing my work. And, it's so funny, man. I mean, it's like there's this weird thing going on where it's like I get people addressing me, and it's like they will address like the one like teeny tiny bit of what I put out there, and then like completely disregard the rest of it. Like, oh well, that didn't happen, you know. And then I've been seeing shit on Twitter. Like, I think it was like last month. It was either last month or last week. It's hard to tell in crypto, man. We're still on this weird time scale because we run 24/7. But anyway, it was this whole thing about let's edit the white paper, the Bitcoin white paper, so that it matches what we want to do to Bitcoin. And bait and switch. What? No, fuck you. And then this last week, I read some other tweet and I responded to it too. It was just too much to resist. But this guy was implying that Satoshi Nakamoto intended us to take the terms metaphorically because he used terms that were easy for the layman to understand. Well, I don't think, no. I think that he meant what he said when he was talking about peer-to-peer cash. That, you know, he intended it to work as cash, you know, which it's currently not, but that's, I would argue, due to factors and participants that don't want to participate according to the white paper, hence why they want to change what it says. It doesn't take too long to figure this shit out, people. I mean, I swear, if you manage to make it through the second grade, you have not dealt with a higher level of debate than is going on Twitter and other social media. I mean, like, literally, that's about the level of it. I've experienced some third graders, you know, where they like intersperse some of their own terminology to get you to latch onto it, and then when you do latch onto it, they call you a sucker for doing it. Yeah, I experienced a little bit of that third grade logic trap today, but that was about it. I mean, for the most part, it's been second graders. You know? It's like, no, that's not what he said. That's not what he said. But, you know, we're living in the internet era. So, you know, it's like this guy was trying to tell me that all of the people that were writing articles to the effect suggesting that Core and some miners got together and they agreed that, you know, they would flag support for SegWit, but only if there was a block size increase. And he was like trying to worm it around with a lot of fucking mimetic and semantic bullshit. But those of us who have been paying attention over all this time, we're familiar with all the connivery. We're familiar with all the backfilling and the goalpost shifting and all that other bullshit that's been going on. And these guys want to pretend like that never happened. And so what I did was I looked up the terminology and I found articles that, shit, I probably actually read them on this show, right? When they were first put up. And I'm like, so the author of this thing is a liar. Because, you know, if you read the article, it's like, it's pretty clear that was implied about what happened with the Hong Kong agreement and with the New York agreement. And so I'm like, here, you know, what, you want to say Brian Armstrong is a liar? You know, here it is. This article was put out there in, I think it was like September or some shit like that. But the point being is, like, this shit happened. You can't pretend it didn't fucking happen. You know? The agreements were made, promises were made, and they have not been fulfilled. One party did fulfill their end, and the other end did not. And we all know this. So it's like, give me a fucking break. Give me a fucking break. Anyway, we're going to go ahead and kick down into some music. And for our first dance, I don't I'm going to make it a habit specifically not to pick something before I actually start anything. Because honestly, I feel most comfortable with this show and doing this show when it's nice and organic. And I don't have any pressure. I don't have anything specific that I have to talk about. Unless, of course, we're talking about I have a guest on here, in which case, I would want to address my guest specifically. But other than that, I really like to go completely organic, because honestly, I get the best work out of myself if I'm just completely freeballing and following links on stuff that interests me. Because the one we did on Monday, I could not have imagined a better outcome than the storyline that particular episode followed. And you know what? It's been the same way with all of my best stuff. Has just been freeballing it. Anyway, so let's go ahead and kick down into some music. And you know what? I want to start off with something off of State of Euphoria here. Anthrax, Antisocial, off of State of Euphoria. First Dance, here on Coin Metal. And that was Pantera with Shedding Skin. Yeah, somebody had asked for something off of Vulgar Display of Power. I believe it was Walk. I could not agree more. I would love to play that. Unfortunately, there were 2 albums out of the 15 that I ordered on my last batch that I did not get. And wouldn't you know it, one of them was Vulgar Display of Power. So apparently there's some asshole in Ohio who has my copy and is enjoying it right now. Hats off to you, sir. Well played. I mean, because obviously he liked it. He didn't return the fucking thing. So anyway, I did have a mixed bag of things I wanted to cover today. And not according to any kind of order or anything like that, but these are just some niblets that I kind of hung on to because they were significant enough to note it for the day. And I don't know where this one is going to take us. It may very well end up occupying the entirety of our sojourn this evening, but you never know. You never know. I'm looking at the Cointelegraph though, and it tells an interesting story. And what I mean by that is, sorry, I've flipped back to my Telegram there for a moment. But the top of Telegraph gives us a little scrolly, and it's an interesting story given the fanfare and the temper on Twitter and other social media outlets concerning this whole flip-flop back and forth from Bitcoin to Bitcoin Cash to BitClash and all this weird bullshit, and SegWit 2x and all that business. I haven't checked today. I bet you anything there is still somebody out there who's flagging support for it. But anyway, where I was going with that is the prices. We hit 8,000 and it looks like we're back down to 75.70. Interesting. And then for Bitcoin Cash, they're showing it 12.53. So that's a 30% uptick according to what it's saying here. So that's something to consider. Ethereum though, Ethereum has been relatively stable, and I've got to wonder what the new Tether attachment to them is going to do as far as their balance sheet and how it will affect their holdings and what their balance reserves show as. I think there's going to be some sort of cross-pollination where you're getting tethers that were created as Ethereum tokens that can be created completely arbitrarily, to my knowledge, without any US dollar backing. If it's anything like Bancor, they can. Okay? They don't need additional Ethereum to come in. They don't need additional fiat to come in. They can just wave the magic wand and crank off some more fucking tokens. Now, I'm not 100% on that either, but that was the impression I got when I read Bancor. They're at the discretion to fucking create more coins at will. Okay? And that's not good, because that's basically what you're trying to get away from with national fiat. You know, where you have the Federal Reserve. I've stated this multiple times, and I will continue to state this, that most of what we're seeing as far as Bitcoin's rise in relative value by comparison to the dollar is a rise in the exchange rate, where it takes more US dollars to buy the same Bitcoin that you bought yesterday. And why? Because there are more US dollars in circulation having been created recently by the Federal Reserve from yesterday to today. A significant amount. Now, when we see dips in the price of Bitcoin, we're seeing people moving around liquidity from one side of the balance sheet to the other to do certain things in either one realm or the other. You know, so it's like most of the vendors in your life still take US dollars. So, in order to enjoy some of your earnings, you have to liquidate. And that's where you experience that business. But anyway, just looking at the price going down for Bitcoin, though, it's interesting to see Bitcoin Cash going up. And it's just as easily to explain it away as some of the hashing power and a lot of the interest is moving from Bitcoin to Bitcoin Cash. Because the people that are running Bitcoin, or at least running the development of Bitcoin, are basically saying to the rest of the community, the network, the users, the miners, that no, we want to go this way with Bitcoin, and fuck you all. Fuck your investment. Fuck all the money that you dedicated to it. We don't care what you want. We want SegWit. So this is the way it's going to be. And see, I don't believe Satoshi Nakamoto really intended the core development team, or the people that had the access to the GitHub repository there, to have that kind of power over his creation. And I think, among other things, we should be doing some sort of vote on the devs. I mean, like, why shouldn't the people that are actually dedicating money to the hashing power, you know, dedicating hardware and electricity and bandwidth, have some sort of say in who is actually developing for Bitcoin? Because I bet you anything, we'd have a lot different creature than we have today. We would have something, I believe at least, closer to what Satoshi had intended all along. And I think that would be the case only because you would then have people who actually have skin in the game determining how the game will be played. You know, these people that are just writing code, I'm sorry guys, as wonderful as your participation and your contributions are, you aren't the network. You aren't the people running the software. And your software is just that. It's just software unless somebody is implementing it. Unless somebody is running it. Then it has value. And this bounce that you're seeing of value, this thing is going to steady out. And I can guarantee you, when all is said and done, Bitcoin Cash is going to end up ahead. And that's just my feeling on that. And when I say ahead, I mean in profitability. I mean, Bitcoin may hold the superiority as far as the overall value, but I think more interest and more development is going to be going to Bitcoin Cash, only because there's 8 times as much fucking space for transactions. That's 8 times as many transaction fees as can fit in a normal 1 megabyte block. And I'm sorry, that's what needs to be done. We need bigger fucking blocks. And if the people that are interested in staying on chain have to go to Bitcoin Cash to get it, that's what they're going to fucking do. You know, and all these people that have been saying to me, oh, miners don't count. And I'm sure it's like 1 or 2 people with like 8 Twitter accounts or some shit like that. They say shit like miners don't count. I'm sorry, without miners, there's no fucking Bitcoin. Because, you know, you have to solve the 10-minute block of transactions. You got to be the first in line to solve that in order for there to be a block reward. No mining, no block reward, no Bitcoin. See how that works? That's to incentivize you, as in, yes, you, the guy on the other end of the speakers, to dedicate some fucking hardware and some hashing power to the Bitcoin network. It doesn't have to be a lot. You know, I mean, it's nice to be, 100% profitable at all times, but, maybe you might have to hold the coin for a month. Holy shit. And at that point, we're not really talking about something that's intended to sustain you entirely. You're not necessarily running out to Amazon and buying a closet full of fucking S9s or whatever and firing them up. I'm not talking about that kind of dedication. I mean, you get a couple old GPUs that you got laying around and you dedicate those to mining. And you just pick a dinky ass coin, and whatever profit you actually make, you'll probably be making on either spikes or knives, one of the two. But the point being, you could reinvest that directly back into mining. And you'll notice this, that a lot of the articles that you read these days about that concern mining and whatnot, they don't talk about mining as something that you should be doing. Okay? They talk about it as something maybe that Venezuelans are doing and Russians are thinking about doing, and they're looking around for spots to do it at. But they're not talking about how you should get involved in it. And I find that to be very perturbing, because like Bitcoin is about participation. It's like you don't get something for nothing in Bitcoin. You actually do have to dedicate some sort of work to it in order to get it. Even if you have to steal it, there's some fucking work involved in trying to steal it. It's not necessarily an easy thing to do. But that's really the point behind it. It's not supposed to be easy to do it. It's not supposed to be easy to mine it. It's not supposed to be easy to transact it back out to fiat. I don't think so. It should be. It can be. But not with the type of, how should I say, interactive means that have been put up so far. Like USDT, that doesn't intersect with the fiat system at all, except for some private bank account, which I have yet to investigate fully, but it is on my clipboard, I assure you. And I think that if I dig deep enough in that, I'm going to find there's some sort of fuckery involved. And think about how scary that is. That the reason why USDT even exists is because a lot of the private banks, a lot of the legacy banks, have been specifically closing the bank accounts of businesses that are involved in Bitcoin and other cryptocurrencies, unless, of course, they are owned by the banks or some subsidiary of the banks, or they have some sort of interest in the company itself, and they're limiting participation in that way. And I would argue it's just as well. Because the fact of the matter is the debasement and the dynamism and the volatility that we're seeing in cryptocurrencies, most of that's actually happening on the fiat side of the equation. And here's how I can tell that that's the case. Most cryptocurrencies, even proof of stake ones, are deterministically created. That means that there's a time interval involved. You don't just, and that of course implies there's some sort of work involved too. But the point being is, you don't just wave them up, you don't wave the magic wand and create them. Somebody has to dedicate electricity, hardware, bandwidth to the process of hashing this this currency. And so when we see them going up in value versus fiat, and we're seeing these huge spikes against fiat, you know that is fiat either coming in or going out of the system. That is monetary value coming in via fiat or going out via fiat, or an exchange rate issue going on with fiat where there was just some glut, some fucking $2 trillion glut of fiat just dumped out onto the world market, and all of a sudden all the ones that you had in your pocket are worth that much less. So when people talk about Bitcoin as having a quote-unquote price, and look at the price of Bitcoin's going up. No, the price of Bitcoin isn't going up. The value of your dollar is going down. The confidence, the market confidence in your dollar is going down. The buying power of the currency in your pocket is going down versus Bitcoin. And you really have to consider that one, okay? When we're talking about Bitcoin, yeah, big whoop-de-doo. There's mining farms out there. There is some sort of centralization going on, but there's also a whole bunch of guys out there with the shit plugged into their garage in their backyard, and they are kicking the ass of the Federal Reserve Bank, the most powerful bank in the entire fucking world. They're kicking its ass. 1 to 7,600. Think about that. I mean, really, how lazy do you have to get for a bunch of people starting this shit in their closets and in their garages? And think about this. It was still at that level. It was still at, running in somebody's fucking dormitory closet at $400 of fucking Bitcoin. I mean, really, consider that. That was the network metrics by comparison to now, where you have all these big-ass hashing farms. We didn't have those back at $200. We didn't have those back at the first $1,000 peak. That was people like you and me that were maintaining that network, and they were kicking the Federal Reserve's ass for confidence and market value, based on what the Federal Reserve was doing to the Federal Reserve note over that span of time. So anyway, what you have to remember is these are all regulated markets, or market participants rather, that are conducting all this shit. When we're talking about like Enron or any of the big financial economic calamities that we've had over the last few decades, we have regulated entities at the base of them, every single one of them. And one of the big complaints about crypto is that we don't have regulators over our shoulders. But think about this. Bitcoin has had 24/7 uptime for the last like 1,200 to 1,300 days. I can't remember the exact number of days, but it's between 12 and 1,300 days uptime, continuous uptime, this whole time. No fraud has been committed through Bitcoin itself. Now, there have been fraudulent participants who have conducted fraudulent activities, but it's never been through Bitcoin itself. Never really somebody waving the magic wand and creating a whole bunch of Bitcoin out of nothing. I think there was some sort of bug like way back in, I think like 2010, 2011, somebody created a whole shit ton of Bitcoin on accident. I can't remember the exact instance of it, but these things happen. People want to look at Bitcoin as it exists right now and think that it existed this way this whole time, and it hasn't. There've been some bumps in the road. Gox was a big one. And as a matter of fact, if we get to it, I've got an article concerning Gox that is like so fucking scary that when I read the title of the article, you may lose control of your bowels. Anyway, this first one is on Cointelegraph here. JP Morgan. You're going to love this. These guys are a regulated entity. They're caught in fraud all of the fucking time. As a matter of fact, I commented on the show before that JP Morgan has paid out more in settlements to the federal government, in court settlements, court judgments, all that other shit over the last decade, the last 10 years. The amount has been more than the entire market cap of all of crypto. Now, I'm not talking about VC investment. I'm just mean, coins and exchanges and hardware. The entire fucking market cap. Anyway, continuing on. JP Morgan, guilty of money laundering, tried to hide Swiss regulator judgment. And this is by Mr. William Suberg, clearly penis, approximately 12 hours ago. JP Morgan CEO Jamie Dimon is facing irony this week after calling Bitcoin a fraud as the bank's Swiss arm is sanctioned for fraud. Reports from local media outlet Die relate how the Swiss regulator FINMA had ruled JP Morgan was guilty of money laundering in June. A legal battle then ensued with Dimon's Giant attempting to prevent the publication of FINRA's judgment last month. However, the law ruled against it, but details of the extent of the wrongdoing remain sketchy. The news is especially amusing to Bitcoin proponents who watched as Dimon's accusations that the virtual currency was a, quote, fraud sent it into temporary freefall in September. Commenters such as Andrew Santonopoulos were quick to jump on the gratifying reversal of fortune, the cryptocurrency expert telling the audience during a Q&A session this week that, quote, Jamie doth protesteth too much, methinks. It's interesting how the head of the largest investment bank in the world finds time in his very busy day to speak out about a, quote, nothing, an irrelevant little technology that has no impact on the world, he added. It's almost disconcerting that he would pay so much attention. Dimon had followed his outburst against Bitcoin several weeks later with an announcement he would no longer talk about it, while other senior figures at the bank said it was open-minded in its treatment of the technology. Yes. Very, very interesting. The timing. For one thing, the crash on Bitcoin, that was actually timed with another thing. And it was announcements that the CBOC was pulling back or putting some restrictions on ICOs. And as a matter of fact, if you go back onto my YouTube channel, I was covering that quite extensively because it seemed really interesting. China's a big player in the crypto sphere. A lot of what they do impacts us directly on many fronts. But this thing with Jamie Dimon, I think it's fucking hilarious. It was timed very well if you really think about it, because at the time he said that the Chinese issue happened, like I think it was like within 6 hours. Okay, that he said that shit. Then 6 hours later there was the announcement by the CBOC, and everything went fucking off a cliff. Then fast forward now to this business here. It's very ironic. It's kind of funny that we can't actually find out more details about it, but let's see if they offer us up a English translation on their whatever it is. My apologies. I I don't do well with other languages. But let's see if they give us the option to translate on here. English. Give me English. I don't know. You would think that Google could work out some sort of translator like that. I mean, they're working on one for audio. Like, I would think that text would be a lot easier. I don't know. I suppose I could be mistaken. But they don't give us the option to put it into English, which is a shame. I would read it. Damn it, Jim. But maybe they got a link to FINMA on here, or FINMA report, or some shit like that. Sort of FINMA, no. Bummer. But anyway, this is keenly interesting. I'd like to see if I can hunt down more details about it, though, because I'm interested to know exactly what the depth of their fraud to the Swiss was, because the Swiss are usually pretty good with their regulations, and I don't know. You would think that somebody as experienced as JP Morgan is in the markets, that they would be able to stay within the borders, you know? Anyway, let's go ahead and get back into some music, and then we'll dive a little deeper into some of this stuff. Anyway, I wanted to throw into some prong, and something off Rude Awakening. Yeah, Rude Awakening. Here it is. Rude Awakening, here on Coin Metal. And that was Ministry with Punch in the Face. Oh man, I gotta tell you, when I smoke my herb, I think to myself, humans are not deserving of this pot. That's exactly what I think. Anyway, I chased down this JP Morgan business here, and I found a article on Reuters. And this was published on, I believe it says here, the 17th of November. Well, yeah, apparently today. And it was updated 14 hours ago. Originally, it was written at 6:30 a.m. Swiss regulator finds JP Morgan broke money laundering rules. Reuters, Swiss Financial Markets Authority, FINMA, has found that the Swiss subsidiary of the U.S. investment bank JP Morgan broke anti-money laundering rules, a Swiss court document showed. FINMA ruled on June 30th that JP Morgan Switzerland had, quote, seriously infringed regulatory oversight provisions according to a ruling issued by the Federal Administrative Court on November 8th and published on Thursday. The case involved a, quote, violation of obligations of diligence on questions of money laundering, the court document said. The court had been examining whether FINMA's previously undisclosed decision on JP Morgan could be made, in a case first reported by the Handelszeitung paper. Both FINMA and JP Morgan declined to comment on FINMA's ruling, and it was unclear what action, if any, the regulator had taken against JP Morgan. FINMA is not authorized to levy fines, but may confiscate unlawfully realized gains, impose professional limitations on bankers, or require an organization to make changes to prevent similar breaches recurring. In severe cases, it may revoke an institution's banking license. Quote, there is nothing more important to us than the safety and soundness of the global monetary system, a JP Morgan spokeswoman said in a statement. Quote, in support of that, we have made and continue to make significant enhancements to the firm's AML program. we ensure we are meeting regulatory expectations. Because this FINMA resolution from June 2017 is not public, we cannot provide further details. Interesting, and this is written by Brenna Hughes. I'm just going to go with Brenna Hughes because I can't pronounce the other name, and I don't do that two-name thing. So anyway, yeah, here we have it. You know, we have J.P. Morgan's CEO claiming that Bitcoin's a fraud, while in the meantime, they were themselves caught money laundering. So, you know, what does that really tell you? It tells you that your accusers are most likely guilty of the thing they accuse you of being guilty of. That's what it tells me. It's not a new occurrence. And I find it really disturbing only because, like, it's like this. In cryptocurrencies, the fraud is... I would imagine there's been some sort of fraud somewhere on our side of things. But the fact of the matter is that our ledgers are publicly accountable. If you're not using the ledger of the currency that you're transacting in when you're transacting from fiat to a cryptocurrency, you're just asking for somebody to rip you off. I mean, not that the actual exchange rate really counts to some bursars. You know, they like to rape you on the exchange rate. But, yeah. It's appalling to me, you know, that here these guys are. Everybody takes them seriously. You know, if you've got an account with J.P. Morgan, you take your advisor very, very seriously. And when he tells you, oh, Bitcoin's a bunch of bullshit, you shouldn't get involved in it, you fucking listen to him. Why? Because the man's been trading for you for the last 30 years, and he's been doing all right so far. Now, is he realizing the kind of gains we are? No. But that's beside the point. The point being that he has a position of trust as the steward of your finances. And while we can't really fraud, we can, but I mean, people have. But chances are, if you're dealing with somebody in cryptocurrencies, when they say they're going to send you the money, they generally send you the money. The fraud usually happens on the fiat side, where somebody will say, I will give you $200 from my swiper card here, and if you would give me X amount of Bitcoin. And if you agree to that, and you come to an agreement, you scan them the amount of Bitcoin, they supposedly swipe you the $200, it goes into your account. And then when they go home after the sixth confirmation on the Bitcoin transaction, they call up their credit card company and they say, I believe somebody has seized control of my account and stolen $200. Would you please charge it back to my account? Well, it happens. But now where did the fraud occur? It occurred on the fiat side. It didn't happen on the crypto side. We can't go back and erase the ledger and jimmy around the transactions to where it didn't happen. But you can on the fiat side. And there are some people that are trying to fix the quote-unquote fix that. That's not really a fix. That's exactly how this shit is supposed to operate. But there are, like with the Lightning Network, they talk about bidirectional payment channels. And basically what it is they rejigger the numbers within the payment channel. That's why the witness data has to be segregated, so they can jimmy it around while it's in the payment channel before they kick it back out to the Bitcoin blockchain in like a month or whatever it is. And that's up to the discretion also of the person doing the transactions or doing the payment channel. it's really funny if you watch and read the information that they give you on Lightning Network. If you are looking for it in a certain way, you can see every single thing that I'm talking about. Okay, but you have to be paying attention. Okay, you have to be paying attention to things like involvement of third parties, uninterested third parties. And it was funny, I got in this fucking Twitter twat with this guy, or girl, I can't remember, I don't know which. And they posted a video concerning Lightning Network, basically to say, you haven't bothered to educate yourself, right? And so I watched it. I'm like, fuck it, it's 15 minutes long. I'm doing something else. It'd be nice to have it going on in the background. And so I'm listening to it. And I hear it mentioned specifically, and then I look up and I see a diagram. And there's Alice on one side, Bob in the middle, and then somebody else on the other side that Alice intends to do the transaction with. Now, I listened to the guy, and he just blasely just kind of goes over it, and he just like, ideally, what would be really cool is if you had somebody who had like a lot of money, and then they could just like facilitate the transaction on both sides, and then Alice could effectively send the money through Bob to so-and-so. Alright? Well, there you go. You have your uninterested third party. Bob is a bank. Bob is a bank with a large amount of Bitcoin and a large amount of fiat, and he can front the transaction on either side. You see how that works? That's why Lightning Network is back to what we had before with trust, because you're putting the state of the transactions and the monetary value therein in the hands of this third party. And more importantly, you've taken the addressing data, the information that determines where the fucking amount is to go and how much and all that business, and you're putting it outside of the encrypted block. So they don't have to decrypt the whole block before they put it back out to the network. They just have to fuck with that stuff, the addressing data, the UTXO set. The shit that they're taking out of the Bitcoin blockchain. I mean, blocks, rather. To make their additional room. When they talk about the 1.6 megabytes, they're talking about they take all this witness data out of the transaction and put it in a different data container outside of the block to be processed by the second layer, or this layer 2 solution, or whatever, the fucking payment channel. And so they just have to, I don't even know if that information will be encrypted now that it's not included in the block. So it's like they just have to scan that information. They can fucking scan it really quick, edit it really quick. They've got the option to do this at a rate of 40,000 transactions per second. I mean, really think about that now. And it could be, the payment channel could be open for as long as they want to hold it open. Not when you want the transaction to clear, when they want the transaction to finish. When they want to settle it back out to the Bitcoin, that's when that transaction happened. That's when the state of that transaction is established. These morons tell me I don't know what the fuck I'm talking about when I actually do Bitcoin transactions. I did one the other day, and my ass still hurts. And I really wouldn't have done it if I didn't have any other choice. Because I'll tell you something, the fucking transaction fee for it was 50% of the transaction itself. Can you fucking believe this? And not only that, I waited around for over a half an hour for my first confirmation, and this is a standard Bitcoin transaction. You can't tell me that this shit is operating this way because there isn't fuckery involved. I guarantee you there is fuckery involved that my standard transaction is going through that much of an issue. That I'm getting fucked so hard on the exchange rate, that I'm getting fucked so hard on the goddamn mining fee. It's fucking ridiculous. This is supposed to be fast, and it was supposed to be cheaper than banks. And if we had 8 times as many transactions happening in the block, it probably could be. You know, take the amount that I paid and divide it by 8. There you go. But it's not happening because we gotta have somebody else process your transaction. The Bitcoin network can't handle it. The Bitcoin network is growing. Like it or not, it's still growing. You know, these assholes that say that stuff to you, they're saying to you, don't become part of the Bitcoin network. Don't try and solve the problem yourself. Don't try and be part of the solution. No, you can't do that. Only we can do that. We can write the code that will fix everything up. You can't do anything by adding some hardware to this. It's complete and total bullshit. I mean, literally, if we started a campaign right now to process Bitcoin Unlimited transactions, or Bitcoin XT or Bitcoin Unlimited, whichever one is the version that doesn't have the SegWit in it. I can't remember which one. Anyway, point being that we could put up nodes for traditional Bitcoin transactions that will bump those along, and it'll kill this fucking congestion that's going on right now. Because if you go to CoinDance and you look at the number differential between SegWit positive nodes and Bitcoin nodes, regular Bitcoin nodes that will propagate legacy transactions, it's like, you know, thousands of SegWit nodes and like hundreds of legacy Bitcoin nodes. And so that gives you an idea of why it takes so long for a Bitcoin transaction to traverse the network. It's because there's just not enough nodes propagating it. And, you know, there's talk again of spam, you know, and they did this the same way on, I believe it was Gridcoin, where when the assholes that decided to insert SegWit into Gridcoin, when they did it, I'm pretty sure they did it the same way, where they dominated the number of nodes, and they just propagated SegWit transactions until they were the dominant ones in the block, and they altered it that way. And so I think what happened at that point, and I had a conversation with somebody on, I think it was on their Reddit or something, and I asked them, I said, well, you know, what's the difference on the network between the legacy transactions and what you're calling spam? And he said there is none. Now think about that. They basically did a coup on the nodes. They refused to propagate the legacy transactions and only propagated SegWit transactions. And then they went back and they told everybody, oh yeah, that's just spam. Those were actually legacy transactions trying to get to the legacy miners, but they couldn't because they weren't being propagated because the nodes themselves were SegWit optimized. And so they were only propagating transactions that were SegWit transactions, SegWit formatted transactions. I would be willing to bet they did the same thing on Litecoin. And this is how they simulated the whole consensus bullshit to get the protocol changed. And so now I think they're doing it to Bitcoin too, where they were calling my transaction spam just because it's not a SegWit transaction, because I don't want to use your shitwit. I don't want to use a second layer. I never asked for a second layer. I wanted to do everything fucking on chain, Fuck you. I'm so sick of that shit. Sick of being told that, you know, oh, I know you were here. I know you were amongst the first miners and shit, but you need to go away now because we're going to come in here and change the shit. Fuck you. Go away. That's not how this shit works. Like I said, we could start a campaign. Just take a piece of crap computer, fire it up, make a fucking node with it, and propagate Bitcoin transactions. You want to see that the numbers, as a matter of fact, I had to look that up, what percentage of transactions in the block are SegWit transactions. I'd be willing to bet it's still under 20%. But, you know, they won't tell you that. They'll call those transactions spam. You know, they're not SegWit transactions, and we're doing SegWit now. So, you know, we know that the 95% of the miners have never come over to SegWit, but we're just going to say it's all SegWit now and lie to everybody. And then when we force through congestion all the transactions onto off-chain, then nobody will have Bitcoin. They'll just have Bitcoin IOUs that they're trading around like they think they have Bitcoin, but they don't really have Bitcoin, and we're accumulating Bitcoin in the background, and nobody will be the wiser until the fraud happens. And we overextend. There's a run. We can't pay out enough IOUs, or it's obvious that we've paid out IOUs in excess of the number of Bitcoins that actually exist, and then the GRBFU happens, and so on and so forth. So let's see here. Percent of transactions SegWit. Transactions. Unfortunately, I can't type and hold the mic at the same time. I'm just not that skilled. SegWit transaction charts. SegWit chart. Transaction percentage. Yep. The number of transactions that are actually SegWit transactions. Get this, okay? It's under 12%. Okay, but they talk like everybody wants SegWit. Everybody's using SegWit. Nobody is using this shit. Nobody is fucking using it. Nobody wants this shit. It's kind of obvious. The people aren't spending their Bitcoin in SegWit transactions. They're spending them in fucking Bitcoin transactions. Regular Bitcoin transactions. And right now, it's so fucking expensive that they can't fucking just spam the network with a whole shit ton of itty-bitty SegWit transactions because the fucking miners won't pick them up. You know, for one, not enough of the miners are even propagating support for SegWit transactions. So that's out. Wow. I feel so much better now. I kind of trip out every once in a while about this, but, you know, here it is. You're not, you're fucking doing this itty-bitty percentage of fucking SegWit transactions. You know, it's fucking pathetic. Wow. Witness size percentage, I don't know. Yeah, I'm looking over the other metrics on here. You know, we're still not bumping over too far over a gigabyte on the block size, or megabyte rather. But yeah, it's hilarious. Transaction percentage right here. Big fucking chart, SegWit charts. And let's try last week. See if that improves things. Well, let's try last 3 days. Yep, last 3 days we're bumping somewhere between 10 and 12%. So, you know, like I said, I feel so much better now. Because it's like, it offends me that they talk like everybody wants this, the community wants this, the community wants this. What fucking community? As far as I'm concerned, the community is the users, primarily. It's the users, the developers, and the miners. These are the quote-unquote community. Not the people that are funding the devs. Not the sock puppets that are getting employed in there. Not the Twitter trolls and all those people. No, those aren't the community. The community is the people that are actually using Bitcoin. And 90% of them are not using fucking SegWit. Something to keep in mind. Actually, it's closer to like 88% of them are not using SegWit transactions. They did not intend to use SegWit as their means of transacting. Anyway, got this other article here, and let's see if it gives us any other information. I was just looking over a Zero Hedge article about JP Morgan and their fucking money laundering. It's hilarious to me. You know, these are the guys that, you know, are supposedly enacting all these AML rules, and yet here they are, money laundering in fucking Switzerland. The bastion of monetary integrity, or whatever the fuck. You know, they're supposedly so secure and all that shit. But I would argue it's probably just a reputation. They probably are a bit more fastidious about their regulation than we are, and it's probably why they actually busted JP Morgan on that shit. But you never know. You never know. Anyway, like I said, I've got a few articles here, and some of them are just stuff that I came across and clicked on and didn't really intend on including into this. So, but we are going to get into that one. Let's try this other one though first. I got one on Fortune.com here. Bitcoin just surged past $8,000. Here's what caused the spike. After dipping below $6,000 earlier this month. Oh, wait a minute. I'm sorry. My apologies. This was written by Lucinda Shen, November 17th, 2017. No penis. After dipping below $6,000 earlier this month, the price of cryptocurrency Bitcoin surged as high as $8,040 on Friday on one of the world's largest exchanges, Bitfinex. Globally weighted averaged high Bitcoin prices were slightly lower, sitting at $79.98. Bitcoin prices have pared their gains since, falling to $78.29 on Bitfinex, close to the globally weighted average, which has gone down since. Still, Friday's surge in Bitcoin's price comes amid growing institutional investor interest, as well as an expected hard fork on Friday that will introduce a new cryptocurrency for Bitcoin owners. Established investors and companies are increasingly venturing into the Wild West world of cryptocurrency in recent months. Payments company Square began allowing select customers to buy and sell Bitcoin earlier this week. The Chicago Mercantile Exchange said it would offer Bitcoin futures by the end of the year, potentially opening the coin to a host of institutional investors. Coinbase has taken aim at hedge funds and sovereign wealth funds with a new custodian service. The aforementioned hard fork, too, is contributing to Bitcoin's rise. The leaders of the SegWit 2x hard fork faction said just before Bitcoin's price slid below $6,000 that they would suspend a proposal to increase the size of Bitcoin blocks from 1 megabyte to 2 megabytes. But major Bitcoin exchanges say today that they still expect a small group of miners to go forward with the SegWit 2x proposal, leading to the creation of a separate network and cryptocurrency. Quote, despite these developments, a small number of miners may attempt to go forward with a fork. David Farmer, Coinbase's Director of Communications, wrote in a blog post Friday. The fork, he added, is expected to occur between 6 a.m. and 8 a.m. Pacific Time on November 17th. I don't know that happened. Coinbase and Coinbase-owned GDAX said they would suspend deposits and withdrawals at 5 a.m. Eastern Standard Time, though traders would not be impacted. Thinking goes that part of Bitcoin's price jump in recent months has been thanks to anticipation surrounding the SegWit2x fork. As a fork results in the creation of a new cryptocurrency, each Bitcoin investor receives an equal number of whatever the new coin may be. For example, in an August hard fork, Bitcoin investors received Bitcoin Cash in addition to their existing cryptocurrency funds. In anticipation of a similar windfall, investors may have bought into SegWit2x ahead of its fork. But due to SegWit2x's limited support now, Coinbase and GDAX say it's likely that they won't allow Bitcoin 2x trading or withdrawals. If other exchanges take a similar stance, investors will have less incentive to buy in before the split. Still, interest in the new coin is still there. Tordemeister, editor-in-chief at Adamant Research, noted that the futures market is predicting a $225 value for the coin, but that's not quite the same level of enthusiasm that was around before SegWit2x's suspension. Back then, it once traded at $1,253. Interesting. I didn't think that it had garnered that much interest, but apparently it had. So, SegWit2x, whether it's happened, I don't definitively know. I have not investigated. I'll probably know by Monday, though. I'm sure that if in fact it has, there's probably something on Bittrex or something like that suggesting something to that effect. But like I said, I haven't seen anything, so I don't know. I couldn't tell you. This $8,000 spike, though, it doesn't explain really what was behind it. It just says that there were certain facts, and it's possible that the SegWit2x thing was a driver behind it. Whether or not that was like the primary factor, I don't know. I refuse to definitively state on that one, but I do have some other stuff I want to get into today. We're going to get into it on the other side of the music. So let's go ahead and throw down. And what to play, though? You know what? I haven't played any Meshuggah tonight. I have not. But, I haven't played any Machine Head either. And from what I understand, Machine Head is actually coming out with a new one, or has come out with a new one, or has a pre-sale right now for a new one. They're throwing it down. Rob Flynn has been all over Facebook, so if you are a fan of theirs, you might want to go on there and check it out. He may be doing it again. He was on yesterday at I guess it was 10 o'clock p.m. Pacific Standard Time, or I want to say it was 9 or 10. And then again, he was on there this morning. When I woke up this morning, fucking Rob Flynn was on there again. I'm like, dude, did you spend all night on Facebook or what? Anyway, so let's go ahead and throw it down. A little bit of Slanderous here off of The Blackening by Machine Head here on Coin Metal. And that was Meshuggah with Clockworks. And those of you who have been listening to the show long enough know how I feel about derivatives. And specifically with regard to Bitcoin. I keep seeing these ideas for ICOs and stuff, and it's just bad juju as far as I'm concerned. Anyway, this one's on Coindesk.com. You're going to love this. Brokerage chief: Bitcoin futures must be quarantined. Couldn't agree more. Inspired good old friend Stan Higgins, clearly, penis. This was written on November 15th, 2017, so here we go. A well-known electronic brokerage firm is issuing dire warnings against the CME Group's plan to launch a Bitcoin futures contract next month. But Interactive Brokers, in a comment letter dated November 14th, suggested a way to mitigate the risk it sees from such activity. The Commodities Futures Trading Commission, under the auspices of J. Christopher Giancarlo, should sequester systems that handle cryptocurrency derivatives. Quote, this letter is to request that the Commission require that any clearing organization that wishes to clear any cryptocurrency or derivative of a cryptocurrency do so in a separate clearing system isolated from other products. Oh my goodness. That is a recommendation that should be etched on the fucking the wall of every person that's developing some sort of cryptocurrency. I swear. Let's continue. Wrote Thomas Pefferly or Peter Fee. Wow, chairman of Interactive Brokers. I couldn't agree more, dude. The open letter published on the firm's website, and we will click on that, and reportedly included in a full-page ad, and we'll click on that, in the Wall Street Journal, comes on the heels of CME's announcement that it would look to offer cryptocurrency-tied derivatives products. Earlier this week, CME CEO and Chairman Terry Duffy indicated that the first product could go live as early as the second week of December. Yet that outcome would pose a significant danger, Pederfy argued, suggesting that a hypothetical plunge in the price of a particular cryptocurrency could send CME reeling financially. In other words, you could get wrecked. He went on to write, quote, if the Chicago Mercantile Exchange or any other clearing organization clears a cryptocurrency together with other products, then a large cryptocurrency price move that destabilizes members that clear cryptocurrencies will destabilize the clearing organization itself and its ability to satisfy its fundamental obligation to pay the winners and collect from the losers on the other products in the same clearing pool. Doubling down on the argument, Pederfy went on to write that, quote, a catastrophe in the cryptocurrency market that destabilizes a clearing organization will destabilize the real economy. Quote, the only way to protect clearing organizations and their members and the financial system as a whole from the unique risks inherent in clearing cryptocurrencies is to require that they be cleared in a separate clearing system isolated from other products, he concluded. Oh my goodness. It's very, very keen, very astute, but we're going to probably totally fucking disregard it. Oh God! I mean, because this is the kind of stuff that the guys involved would be saying, like, right before the vehicle crashes into the wall. I mean, that's like, seriously, it's like, we really ought to keep this thing separate before some sort of contagion in our system fucks the entire world economy. Come on, dude. And I'm looking at the guy right now and seeing where he's at. See if I can find him, because I want to send something to him. He lives in Florida, and he's in electronic trading of securities. Net worth $13.8 billion. Jesus Christ. Dude is rich. He's probably like afraid that this is going to wreck him. Dude, I share your concern. I'm telling you. Share your concern. Holy. Well, let me see if I can find him on Twitter. I bet he's there. Everybody's on Twitter these days. Oh, yep, he is. And so, I'm gonna tweet to him. He's protected and all that, but I'm gonna tweet him anyway, because he seems like an astute individual. Seems like he might have something on the ball here, and so I want to add a little bit of I don't know how to explain knowledge. Drop a little knowledge on him. So let's see here. We'll do the tether one though, because that pertains specifically to what he's talking about. Let's see here. Given your stated concerns about the CME's proposed derivatives market, let's see, I think you'll find this at least entertaining. Yeah, spreading the love. Gotta do it. I mean, because if you don't, who will? Oh, man. People are finally catching up with my music selection for the evening. But yeah, so Interactive Brokers, keep that shit quarantined. Could not agree more. I mean, because that's exactly my feeling with regard to the let's see what their open letter is here. That's exactly my concern with these products, is that they'll have some sort of market contagion, or just as bad, that, like I said, you'll end up with something like Bancor or their tokens being transacted as monetary value or as a sum of monetary value. They're backed by Ethereum, but the people that run Bancor can create new tokens at will. Okay, so they have the capability of debasing their own currency right out from under you, regardless of how many Ethereum they have. And as a matter of fact, I think that's part of their process, is creating and burning them. But the thing is the time interval between creating and burning, they were very non-specific on, but they do have discretion over that. And so that again is a concern, because they could be holding that as an existing monetary unit when in fact it's either planned to be destroyed or it has been destroyed. What's the lag differential between when it's actually destroyed and when it's reported as destroyed? Who has discretion over that? Probably Bancor. And so again, people aren't thinking these fucking concepts through when they're considering what they're going to put their money in. A few months ago, that ICO Contagion was such, all it had to have on it was ICO, and people freaked the fuck out and threw money at it. It's like, oh, that sounds like it's got an ICO. It's got to be good. It's got to be good. We can make some money on that. Give me a fucking break. So I'm trying to find this document, this open letter here. I opened up the web page for it. It didn't seem like it was there. Let's unclose tab. Here, open letter. Come on, load the damn thing. Give it to me. That's weird. Like, oh, there we go. It appears I've downloaded it like 8 billion times, but the indicator wasn't very big. Let's see how many pages this bad boy is. Oh, it's just one page. That's cool. We're going to go ahead and chew on this one. And this is by, I'm supposing, J. Christopher Giancarlo, Chairman, Commodity Futures Trading Commission, blah, 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 RE, dangers of clearing Bitcoin and cryptocurrency derivatives in the same clearing organization as other products. And this is, I guess this is from Thomas Petterfy, the chairman, written on November 14th, 2017, clearly from the picture on his Twitter and his name, Penis. Dear Chairman Giancarlo, I am the chairman and founder of Interactive Brokers LLC, a futures commission merchant and broker-dealer with over $3.8 billion in regulatory net capital and over $1.2 billion in client margin funds. Interactive Brokers Group is publicly traded on NASDAQ with a market cap of over $22 billion. As a CME clearing member, we are deeply concerned with the proposals that would allow Bitcoin and other cryptocurrency derivatives to be cleared in the same clearing organization as other products. This letter is to request that the Commission require that any clearing organization that wishes to clear any cryptocurrency or derivative of a cryptocurrency do so in a separate clearing system isolated from other products. There is no fundamental basis for valuation of Bitcoin and other cryptocurrencies, and they may assume any price from one day to the next. This has been illustrated quite clearly in 2017 as the price of Bitcoin has increased by nearly 1,000%. Cryptocurrencies do not have a mature, regulated, and tested underlying market. The products and their markets have existed for fewer than 10 years and bear little, if any, relationship to any economic circumstance or reality in the world. That's not true at all. Margining such a product in a reasonable manner is impossible. I agree. While the buyer, the long side of a cryptocurrency futures contract or call option could be required to put up 100% of the value to ensure safety, determining the margin requirement for the seller, the short side, is impossible. Instituting daily price move limits on cryptocurrency derivatives does not solve the problem. In a runaway upward market, for example, like the silver market in the 1980s caused by the Hunt brothers, the futures price gets knocked limit up day after day with little or no trading, and the short sellers are unable to cover, leading them and potentially their clearing firms to ruin. I couldn't agree more. If the Chicago Mercantile Exchange or any other clearing organization clears a cryptocurrency together with other products, then a large cryptocurrency price move that destabilizes members that clear cryptocurrencies will destabilize the clearing organization itself and its ability to satisfy its fundamental obligation to pay the winners and collect from the losers on the other products in the same clearing pool. Accordingly, even clearing members who do not wish to clear cryptocurrencies because they judge the risk to be too great cannot isolate themselves and their customers from a potentially catastrophic loss from cryptocurrency risk at the clearing organization. Thus, it is no answer for the proponents of clearing these products to suggest that objecting clearing members can simply charge very large margins or not offer cryptocurrencies at all. In a central clearing organization, all members are at risk for the activities of any member and of the clearing organization itself. Unless the risk of clearing cryptocurrency is isolated and segregated from other products, a catastrophe in the cryptocurrency market that destabilizes a clearing organization will destabilize the real economy, as critical equity index and commodity markets cleared in the same clearing organization become infected. I use that same exact fucking word, infected. The only way to protect clearing organizations and their members and the financial system as a whole from the unique risks inherent in clearing cryptocurrencies is to require that they be cleared in a separate clearing system, isolated from other products. We would be happy to discuss this with you or to provide any further information at your convenience. Chairman Petterfy, Thomas Petterfy. Very powerful, very truthful. I couldn't have put it better myself. I probably put it in some of the same exact words. Infection, contagion. These are the words to be used when we're talking about some fraudulent monetary value being transacted between the cryptocurrency markets and the fiat markets and now into the derivative markets. Forget about it, man. Forget about it. Don't clear the shit on the same products. Just don't do it. Keep the shit isolated. I mean, because I've predicted the GR Bufu. I predicted it for years. And as a matter of fact, I sent to Mr. Petterfy a link to my latest factor in the GR Bufu as I see on the horizon. And, like I said, out of all of the information that I've been seeing about cryptocurrencies interacting with fiat currencies, I've got to say the most reasonable and well thought out and nuanced perspectives coming from members of the legacy markets have been in the most recent months. I did a primer of the CFTC's primer on cryptocurrencies. I got to tell you, those people, at least according to the text as delivered, they know what the fuck they're talking about. And really, you can't do much better than the advice that they give you. I mean, there's some nuance, and I put some extra flavor in there, a little bit of pepper here and there, a little paprika, maybe some cilantro. But other than that, it was a solid and a comprehensive set of implementations that any trader, any reasonable trader of cryptocurrency should be considering as part of their normal practices. And again, this by Mr. Petterfy, Mr. Thomas Petterfy, again, very solid perspective. The guy is aware of the risks involved, and he's adequately concerned about those risks being introduced unnecessarily, above all, to the conventional derivatives market via cryptocurrency fluctuations in price. And this has been my primary argument against things like why you cannot peg a cryptocurrency to a commodity or a fiat currency, because any dramatic valuation, it fucks you all up. You know, I would argue that the same thing would fuck you up with things like Ripple if it were allowed to exist as a normal cryptocurrency. I don't think they'd be able to keep a lid on it as they do now, and they still do have some problems occasionally. But anyway, point being that any time that you are putting somebody in a position of trust, you know, whether it's being a custodian of your funds and whatnot, you're introducing a big question mark, and you got to look at your investments in kind of like a production line kind of mentality. You know, you've got your initial investment, which is your raw materials that you start in your production step 1, and then you have X amount of production steps to the end, which is profit, or your goal, you know, whatever your end goal may be. That's the end product of your production line, okay? And every time you introduce a trusted arbiter, you're putting a question mark in your production line, where you've changed a determined time, a determined interval of time or whatever, to an arbitrary time, to a non-preset time interval, to a non-set production rate, to a non-set exchange rate. You've introduced a question mark. And see, this is my biggest argument against this whole Lightning Network business, because as soon as you go off chain, the state of your transaction, when it's actually going to clear, how it's actually going to clear, these are all question marks now that you've thrown into your production line that didn't exist before, that don't have to exist for Bitcoin to work as intended. See, and the other problem that none of these fucking assholes that are proponents of this shit talk about is this aspect of trust, and the fact that we were operating just fine without it, and the fact that what they really want to do is this: the level of trust that they're asking for can be assumed right now. You can do off-chain shit. You can do it. But here's the thing: if your actions, if you're the function of your shit that's operating off chain, if it in any way is holding on to people's money for any duration of time, you are now a custodian. If you can by your actions affect the state of the transaction when it goes through any of that other shit, you are now a custodian. So all of the regulatory shit out there that applies to custodians out there, and let me tell you, they've got it on the federal level and they've got it on the state level. You now fit those legal definitions of a custodian, and you will now need to pay for licenses and be regulated. And you'll now be having to suffer that regulatory burden. They don't tell you that, though. And additionally, when you say you're doing one of these payment channel businesses, when you close out the payment channel, that transaction that you do that closes out the payment channel, by doing that action and settling out all the transactions that happened in your payment channel during the duration of its openness, you are now a money transmitter. And if you don't believe me, you can go back to my fucking YouTube channel and you can listen to all of the legislation that I have read on this show. And I can guarantee you, if you listen closely, you will hear the descriptions of money transmitters. You will hear the descriptions of custodians. I've covered fucking paperwork from FinCEN. I've covered shit from fucking New York. I read BitLicense on this fucking show. I read it from end to end on this show. I read Kashit License in all three of its iterations. When they tried to change the label on it and change the number on it and just reintroduce that shit to the state legislature. Yeah, I read that shit too, here on this show. So don't tell me I don't know what I'm talking about when it comes to this money transmitter business, Because like I said, you can go back and you can fucking listen to it. It's up there on my website, on my YouTube. But anyway, as I was saying, that when you read through the paperwork, the documentation for Lightning Network and all of that, and you listen to these presentations that they give, listen really closely to the language that they use, the vocabulary that they're using, okay? And then go back and listen to those episodes where I am reading legislation, and you will hear those same exact descriptions. If not the specific names involved, the description of their function is there. And it's hard to see all these little factors and how they coalesce into a derivative narrative from where Bitcoin originally started. You just got to look at it from all of the parties that are currently involved in the legacy system. You have banks, you have brokerage houses, and then you have feds, and you have regulators. Okay? These parties are all interested in maintaining the status quo, because if the status quo changes, their roles change. And we're changing the fucking status quo. We are reformatting the digital global economy. Whether anybody likes it or not, that's what's fucking happening. And, I can't put it another way. I mean, we are literally like, nuking and paving the fucking global economy out from under everybody. But there's some people that want to do it in the background on top of the Bitcoin blockchain and make the Bitcoin blockchain just a big settlement layer for all of it. And that again completely deviates from the intent of Bitcoin and other cryptocurrencies. We're supposed to be operating without third-party intermediaries, not involving more of them between us and the miners and the customers. Anyway, let's go ahead and throw down some music. And I'm feeling in a Slayer mood. I got a song by Slayer up here, Spill the Blood, here on Coin Metal. And that was Static X with Cannibal. Anywho, as we're closing out this episode, I got one more for you. And I think you guys are going to love this. It's really funny stuff. This is on Coindesk.com. Gox ICO. CEO Carpelli's floats token sale to revive Bitcoin exchange. Stan Higgins wrote this on November 17th, 2017. A Mt. Gox initial coin offering. It's not unthinkable, according to the defunct Bitcoin exchange's controversial CEO. In a blog post published yesterday, Mark Karpelius detailed possible avenues for reviving Mt. Gox, the once dominant Japanese Bitcoin exchange that collapsed amid allegations of fraud and mismanagement in early 2014. Hundreds of millions of dollars worth of Bitcoin at then current prices were feared lost, though ultimately 202,000 Bitcoin were retained as assets under the custody of a trustee. In the aftermath, Mt. Gox entered bankruptcy and has since been at the center of an acrimonious, years-long claims process, including a $75 million claim from CoinLab. Prosecutors in Japan later charged Karpelli's with embezzlement, with that trial beginning earlier this summer. The blog post also addressed a recent bone of contention. While the value of the remaining Gox BTC has swelled as Bitcoin's price has climbed to close to $8,000 per coin, those seeking to recoup their losses may ultimately collect much less, if anything. And while some are clamoring for that increase in value to be factored into the payouts, Karpelès pushed back on the idea in the blog post, stating that those gains haven't actually been realized yet. Among other complications, the bitcoins remain in the custody of the Mt. Gox trustee. One possible avenue around the issue, reviving Mt. Gox with a price tag of $245 million. This could be accomplished either through a recapitalization by way of an equity sale or an ICO, according to Karpelès. He wrote, quote, "Launch an ICO to raise money to hypothetically revive Mt. Gox. This sounds more challenging both legally and because there is no guarantee of raising enough to revive Mt. Gox. In case there is not enough raised, it could be locked to be distributed to creditors, which would be better than nothing." And in a seeming acknowledgement that the idea is rather far-fetched at present, Karpelès suggested that anyone interested in recapitalizing the exchange should get in touch. Quote, "Should anyone have $245 million in USD hanging around and want to purchase Mt. Gox, just drop me an email," he wrote. The leader, okay, blah, blah, blah. Yeah, so, you gotta be fucking kidding me, man. You gotta be fucking kidding me. He's got people's funds locked up. He's refusing to divest those funds to the appropriate persons. And he's asking for more money. What do you want to bet the $245 million is either to A, incentivize the curator of the funds to release them, or B, to pay for more Mr. Karpelès' legal fees? I would assume if he had not actually absconded with everybody's money, that's probably still going to be an issue for him, covering his legal fees and whatnot. So yeah, that's pretty scary. The idea of Gox coming back via an ICO of all things. Give me a fucking break, man. I mean, it's no wonder that Mr. Peter Fee is worried. I mean, he probably saw that article about Mark Karpelès trying to make an ICO for Mt. Gox and said, "Holy shit, we got to get ahead of this. We got to get ahead of the contagion of this shit, man. It's going to break out and everybody's going to lose their fucking money." And no. Oh, man. I mean, and really, if you invest in it, my hat's off to you for faith that something could ever work out well for that. But it's like minus several million points for good thinking, because you're just not. Sorry. I mean, Karpelès, if anybody ever employs him in the crypto space again, it should be to be like, if he were guiding people on like what not to do as the manager of a cryptocurrency exchange. That would be as far as I would trust him. An advisor on how not to do it. And what the way I would do it though is I would like call him in as an advisor and like call him and say, "All right, so how do I do this thing?" And let him give me all of his advice, and then make up a proposal and a plan to do 180% opposite what he said to do, and to implement, what not to do, or at least consider what not to do, and see if you can implement it with the 180% that he told you not to do, and your degrees, rather, 180 degrees. Yeah, I'm sorry, Mark. I wouldn't take your advice with regard to cryptocurrencies, or I would take your advice on how not to manage them in an exchange, because clearly your custodial model leaves something to be desired, or it left something to be desired before what was desired was absconded with by somebody, apparently. Anyway, I think I might have time for this one little article. If it looks short enough, I think I can squeeze this in, but this is another entertaining one. This one's on bitcoin.com, and it's written on November 17th. Pre-mined, I'm sorry, my apologies. It was done 1 day ago by Cindy Wang. Clearly, no penis. Pre-mined initial fork offerings, IFOs, the new and trendy way to fund crypto projects. First Bitcoin Cash, then Bitcoin Gold, and now another Bitcoin hard fork, the Super Bitcoin, is on its way. What? Super Bitcoin? What's Super Bitcoin? That's a new one on me. Is on the way. It plans to be forked at block 498,888, and the original Bitcoin holders will be given 1 SBTC for 1 BTC for, quote, free. SBTC fork at height 498,888. According to its official website, SBTC will scale its block size to 8 megabytes, featuring smart contracts and a lightning network. Wow, can't really do that, but okay. Li Ziliao, or Xiaolei, my apologies, a Chinese Bitcoin tycoon, is the man behind the project. Li is a controversial person in the Chinese community who initiated such ICO projects as EOS, ICO.info, and Press One this year. The Press One project received $550 million within 3 days without releasing a white paper, and was described as a typical, quote, scam by the Chinese mainstream media. When China ruled out ICOs this September, Li published a letter apologizing that he had overvalued his ability and regretted if he had somehow misled crypto newbies. After that, Li was safely, quote, forgotten by the community until now. Super Bitcoin, as it is pre-mined, has once again put him in the spotlight. The project has 21,210,000 SBTC in total, out of which 210,000 are pre-mined. Pre-mined coins will be used for early development. Like Bitcoin Gold, the SBTC team explains that pre-mined coins will be used for early development, but also for ecological construction. That's interesting. Jiang adds that it's pointless to have another big block coin, and he doesn't see SBTC as a threat to Bitcoin Cash. I wonder if Li will write a white paper this time, ridicules Jiang. Another 2, quote, initial fork offerings on their way. An industrial player reveals that another 2 Chinese hard fork projects, Bitcoin Century and Bitcoin Diamond, are also on the way. He believes this is an ICO in the disguise of a hard fork or initial fork offering, as he claims. Initial fork offerings have become an innovative way to raise funds, but a pre-mined is more like a scam instead of trying to make Bitcoin great again, says Jiang. Yes, I agree. Yeah, scammerific. Stay the fuck away. Don't even give it a second thought. And it is with that we are going to close out this episode. I'm not going to give you a hard opinion on this other than to say it's most likely bullshit and you should just stay the fuck away from it with your money. Sorry. Anyway, we will be back again on Monday at 8 p.m. Pacific Standard Time. And so until then, I want you all to trade safe, watch that Bitcoin Cash. Do your fucking homework! And watch out for your own bunghole, because, man, nobody else is going to do it for you. Y'all have an excellent weekend. and I'll see you all again on Monday. Thank you very much for listening. I certainly do appreciate the support. Like and subscribe on YouTube. I'll be sure to get this episode up as soon as I possibly can, and I'll see you guys again on Monday.